We raise this question and let you know the S&P 500 has gone 107 sessions without a drop of at least 2%. That's the longest stretch since July of 2024. Yesterday, the Fed chair, in much talked about comments, said stock prices appear, quote, fairly highly valued. Ed Yardeni said of that it was Powell's irrational exuberance moment. Is that what it was, Joe?
Not sure that he wants it to be the irrational exuberance moment, because the irrational exuberance moment was followed by many years of price appreciation.
Right. But that's part of the point. Does it even matter if it is?
Look, Chairman Powell has done an excellent job as Federal Reserve Chairman in terms of analyzing whether markets are fairly valued, fully valued. I'm going to look at the market for that. I think that where we are right now is obvious that there are some extremes when you're talking about valuation. I also think that we're getting worked up and very excited about trying to identify this specific inflection point for the market. Oh my God, here it comes. The market is about to turn. You will know when the market turns. And what's so interesting about that is that the very people who spend months and years telling you that the market is about to turn, when it actually turns, they'll take the other side of that after several months. So I think it's important that you just kind of set an expectation and understand that a correction is normal. You're moving towards the end of the quarter. You have several days left. We've had a lot of good news in this quarter. The market has done a lot of work already in this month. The next couple of days, the market could go anywhere, Scott. I'm sorry, it could. It could go up 1.5%. It could go down 1.5%.
Kind of like you're going anywhere looking at whatever camera you want to. You know, the red light means you're looking at that camera, right?
Yeah, I know. Well, I was fixing my earpiece.
Thank goodness for Julie down here. Thank you.
But listen, the market over the next several days could go in any direction. Understand that. There is still a prevailing secular bull trend.
Okay.
There are still areas of the market that are viewed as unappealing, which we're beginning to see capital flow there. Why? Because institutional money managers right now are offside. They're chasing that performance to the end of the year. So you're seeing energy rally. Is anyone come on your show, whether it's halftime or closing bell, and said, Scott, we really want to be long China? FXI is up over 30%. Then you get the news from Alibaba today. So there are things within the market where you're seeing the mean reversion, and that's not evidence of a market that's thinning out. The market needs to thin out for it to be at an inflection point.
Okay. Shannon, fairly highly valued. Is that some kind of warning from Powell? Ed Yardeni suggesting it's the irrational exuberance moment. For those who don't know what he's referring to or understand the context in which he is saying that, it was Alan Greenspan, of course, who famously said irrational exuberance about some of the moves in tech stocks and the NASDAQ way back when. Of course, it was 4 years before 2000 happened. 4 years. So that's why I asked, does it even matter if it was just that, of Powell suggesting that? If I told you in 2004, if I said, you know what, man, these banks, they're writing these risky loans, these mortgage issuers, they better not issue all these mortgages to people, would people have stopped piling into those trades 4 years ahead of the blow up? No, they wouldn't have.
Right. So I think the Powell comment, I think, is an acknowledgement that they're essentially cutting rates into what is essentially a likely reaccelerating economic environment, coupled with on the back of a significant appreciation in capital markets. So if you look at his perspective, he's acknowledging the fact that there likely is potentially some risk as it relates to the valuations in which many U.S. consumers, Scott, have their wealth invested. However, I think the difference is that he's really looking at this and trying to pivot the conversation to financial.
Powell or Yardeni?
No, Powell is trying to pivot the conversation to financial conditions, which is frankly where his interest lies. Powell is being asked about the equity market because there is this misconception that the Fed cares about the equity market, that they're really looking to create some sort of safety or
they care about
foundation.
They care about the equity market. And by the way, we're not suggesting by even bringing this up that he's necessarily referring to the entire equity market. You know, there was an interesting piece out today that Bloomberg cited. Frothy and risky rally in profitless tech grows as the Fed eases. They looked at a basket of unprofitable tech companies tracked by UBS, has jumped 21% since the end of July, compared with a 2.1% advance for profitable tech. And the NASDAQ 100, which has gone up 6%. Now, they're talking about stocks like IonQ, which Bryn has obviously mentioned, which has gone parabolic, and things like Lemonade and Open Door, which has traded like a meme stock, and some others. But, you know, there are names like Palantir on track for its 7th straight quarter of double-digit gains. The high beta ETF has been up for the past 7 weeks in a row. That's the best since the period of December in 2023. So, I mean, you can make the case that there's froth in some places of the market, can't you?
Oh, yeah. And I can make the case that there's no froth in other places in the market. Unfortunately, I'm sitting in those. Or maybe in the longer term, fortunately, I am. So I had an interesting past 2.5 weeks. I spent a week in California, and then I spent the past 3 days in Rhode Island meeting with clients. And
you were not at any REIT conferences or anything like that?
Why are you so fixated on that?
Well, because, I mean, the last time you said you had some interesting time, it was like back-to-back REIT conferences.
And it was. One day you should join me. You'll learn to love the REIT conference too, Scott. But so here I am with this froth in the market, with the market up 14% almost, and nobody feels good. Absolutely nobody feels good about it, at least none of the almost 20 clients that I met with.
They don't feel good about the market being up?
No. They're happy their portfolios are up, but they're unnerved because everybody has that sense of froth, right? And even if their portfolios aren't playing in the frothy areas, they have that sense that there's this froth, that there's this disconnect, that things are fairly highly valued. Maybe they're thinking that they're overly valued. So while everybody's thrilled that they're up, they're not feeling comfortable and enthusiastic about what comes next. And I think this is where it's really a nice time to be an active manager, because then you can say, hey, you know, we can avoid that. And when you're a really active manager, not a closet index active manager, when you're a really active manager, you can go to places where the froth doesn't exist, and you can go to international stocks. You can go even within the energy index, right? There's some stocks that are up 40%. There's some that are flat. There's some that have a 6% yield. There's some that have no yield. But you can pick things out and stay in stocks, because I do think that stocks remain the place to be for at least the next couple years.
You could say that some of these names that I mentioned are poised for a pullback, but you could have said that 4 quarters ago for Palantir, I just said they're on track for their 7th straight quarter of double-digit gains. Krinsky at BTIG says high vol names are poised for downside reversion. Could he have put that out 3-4 months ago? Yeah. The point being is that at times when people have gotten nervous about the market, these kinds of stocks have continued to go up. They've proven a lot of the naysayers wrong.
Right. And then a lot of times they've also ended up having major retractions, down 60, 70, 80%. And I think the challenge with a Palantir, which is no argument, amazing company, but when you're trading at 150 times earnings, at that point, you're really speculating when you buy that stock versus investing. Because you can't say, okay, I see the earnings growing at, what did they grow? 39% last quarter? 39%, but it's still 150 times earnings. So you can't say, I see the earnings supporting, a share price of.
Well, you're
just
betting
purely
that's what the whole game is. With high growth stocks with high valuation, you're betting on them growing.
You're speculating.
Yeah, well, you can use speculating, betting. I don't know.
It's like greater fool theory.
Were you speculating back in the early days of the Amazons? I guess you were speculating there too.
Yeah, and so you need to define what kind of person you are with where you put your money. Are you speculating, or are you really investing and just putting one foot in front of the other? Different strokes for different folks. Some people are comfortable with that froth and that speculation and really riding a roller coaster, and some aren't. Both can do very well over the long term, but you need to be in whichever strategy you can live with through the ups and downs.